We got over 100 people to pay us $15,000 or more to learn the information I'm about to share with you. Hey, this is Dan. And over the last 12 months, we looked back at our data and we had 25,000 people register for an event. 5,000 or more people have shown up to an actual event. 600 plus people have actually paid to see this information. And then 100 people to pay us over $15,000 to help them build the system into their business. And so what we do right now is we help tax professionals, CPAs, EAs, tax strategists build a tax advisory firm that can do a couple $1,000,000 a year, like we did for one of our firms. And so we just share the strategies and the acquisition systems and the processes that we did to build a business like this that people enjoy and people love. And yeah, I want to share with you kind of what the process or what they paid us $15,000 to do and teach them. And so in the next video, or we're going to jump right over to the training video I did internally for these people that paid us over $15,000 a year, or sorry, every 6 months to learn this. And so if you want to grow and scale your business and you're looking at it through this lens and you're a tax advisor, then I advise you to watch our free training so you can see how this works. But also watch this training to the end so you can see how it looks to work with us. And if you're just looking on to try to get some value, that's cool too. I'm cool with that. I do these videos right now just so I can document the process of what we're doing to scale past multiple millions of dollars per year. The goal is really just to teach some best practices that we're teaching our people to do. We've had people do their first 100,000, the first $10,000, their first $50,000, their first $1,000,000, their second $1,000,000, their first $500,000, all within the first 12 months of doing this. And so really excited to share with you the system that they see and how I take them through the process systematically on how to scale their business. So let's jump right over to that right now and you guys can enjoy the rest of this video. So today I want to talk to you guys about the 3 phases of this particular program. The goal here is transparently, we want you guys to build a business that is truly remarkable, that you can one day either sell it or you can hand it off to your successor behind you, or you could just work in the business and not have to be trapped with a high-paying job. We want you guys to have some freedom. And I hope that's your goal for being in this program as well. And we know that the best way to do that is by charging high enough amounts to good people so that you have enough profits to hire better people to take care of those good people. Does that make sense? Okay, and I hope you guys, some of you guys have been with us for over a year. Some of you guys are just starting with us. Those of you that with the year can contest or can attest to what I'm saying is that you do want to charge more and you want to charge to better people. Then that allows you the freedom to go and hire the best candidates that can serve those people so you don't have to. Okay, and I'm hoping, I don't know, it's the beginning of the year. This is my first Friday of the year for you guys. Oh, actually, the first Friday. How many of you guys worked, I'll ask here transparently, how many of you guys worked less in the nitty gritty this year after working with us than last year? Put it in the chat. I want to know. Pam? Okay. Pam did it. Okay. George did it. Very good. Okay. But the fact that you made more or worked less and made about the same, that's a good sign, which means ultimately what you guys want to look at is like my dollars per hour, right? Are you making more per hour than you were the year before, meaning you're more valuable? So if you made the same amount of money, let's just use a hypothetical here. Let's say you made $1 million. And last year, let's say you made $1 million. And last year you worked 2,000 hours, which is the average. You're earning $500 an hour, which a normal person that works 40 hours a week, 5 days a week, it comes out to about 2,000 hours a year of work hours. So if you'd work that, and you made whatever $1 million, you made $500 per hour, which is a good sign. Now, if you made $1 million in, let's say you made $1 million and you worked 2,500 hours, right? Oh, sorry. The number just gets worse, right? So you made $100 less per hour. So as a result, what you want to be doing as an entrepreneur, as a business owner, you want to be trading up your time. Meaning you want to be getting more per hour per the time that you spend on these things. And the more you spend on things, more time you spend on things, the lower your revenue per hour is, and therefore the less valuable the thing becomes. And so you almost want to find ways to leverage. That's really what I'm trying to always find leverage points. Because as the business owners, you guys, or even if you're on this call here, it's because the business owner that you're working in their company with thinks that you need to be here to understand these things, because these are high-level talks to have. You can't just have with just everybody. You have to have them with people that are key people that are. I heard. Do you guys know who Dave Ramsey is? Dave Ramsey. Okay, and he was talking about. He said the saying. He said, um, you need to get the thoroughbreds, and you need to get rid of the donkeys. I was like, that's so funny. That's messed up, but it's so funny and it's true, right? You can't take the thoroughbred to you can't really train a donkey to be a thoroughbred, right? And vice versa. A thoroughbred's not going to work with your business if you're a donkey. And again, I'm not calling anybody a donkey, but it was just Dave Ramsey used it. So I thought it was hilarious that he said that. That being said, you guys want to trade out for your time so you can get more per hour. And every time what I do, breathers, everything that I do in all of our team here, and David and George, everything we're trying to do is make your life easier, faster, more seamless. And so every time I come to you guys with a new concept or something, it's just more of the same that I've already taught you, just in a different way. So I make it more concise. I'm trying to figure out every day, how do I make this faster for you? How do I make this easier to understand? How do I make this so that there's less roadblocks between you and your goals? And the more you share your goals with us, the better it is for us to help you, and the faster we can help you with it. So that's kind of like a play. That's kind of like a call out to, share your goals publicly, and more often. The more you do that, the more that we can support you. The less you do that, the harder it is to support you, and the less clear you are about the goal, then the less likely you are to hit it. There was a study done, I think it was Harvard University, that they said that people that had a goal actually wrote down their goal. They were 42% more likely than those to achieve that goal than those that did not write it down. So if all you did right now was, after this call, write down your goal, you're 42% more likely to achieve it. So if you guys like 42% increases in anything, then do it. If you don't, then don't. But anyways, that's not what I'm here for. What I'm here for today is to show you the three phases of this particular program, and how this scales, and how you find yourself in each component of these things. Now, I'm not going to give you the sheet. I'm just going to share this with you, but I'm going to show you kind of the phases that you want to kind of go through. The main core thesis of our program is to help you build a client acquisition system. That's what this particular program, Tax Advisor Accelerator Program, is. It's to help you build a system to acquire high ticket tax advisory clients. Okay. Everything else is just a component of that. We're just trying to help you get that component. Phase one is, we call it the learning and earning phase. Okay. And I'm going to walk the line kind of the top down so you can understand these things. The learning and earning phase, this is good for those of you that are just starting our program. You're like, okay, I need to know the path of where I'm going, or how I know if I'm on the right track. The learning and earning phase is really just, you're going to learn a lot. You're going to get into the school. You're going to learn the stuff inside of school. You're going to learn how to do a tax plan. You're going to learn what tax strategies to use. You're going to learn how to do warm outreach. You're going to learn how to sell. There's a lot of learning and earning in this phase. It might be slower than most things, and you might actually get some clients. And that's the goal for phase one. Phase one, it's like an accordion. So phase one and all these phases are like an accordion. So I can compress phase one to 2 weeks, or I can expand phase one to 2 months or 4 months. Does that make sense for you guys? How fast or slow you go, or how you want to go, is dependent on how much pressure you apply to the phase. So in phase one, it's all about learning the thing, learning what we're talking about, learning and earning. And the reason why I call it learning and earning is because you don't want to learn then earn. You want to earn while you learn. So core difference there is, a lot of people pay to learn, but they never learn how to earn. And I know I'm using these weird terms. It's probably throwing everybody off. But think about it like this. You go to college and you spend 4 years to learn how to go do whatever you're going to do. You paid to learn. Whereas other people, like contractors, right? They learn the trade, but they get paid to learn the trade, which is why they're, move faster in those scenarios. And that's why in this phase, I want you guys to learn and earn. Don't try to learn and be perfect. You want to learn and be prolific. You want to start moving. Movement is the most important part of phase one. And so in phase one, the goal, the core outcome that you really want out of this, is to sell your first 5 assessments by any means necessary. So you want to do that through warm outreach. You want to do that through mostly warm outreach, posting content. If you're in phase one, you should not be thinking about advertisements at all. You shouldn't be thinking about paid ads. You shouldn't be doing nothing like that of the sort. And if you guys can mute yourself on the way in, that'd be awesome. In phase one, you don't want to be thinking, whoa, hear myself a couple of times. Yeah, in phase one, you don't want to do that. Hold on, let me see if I can mute everybody. Give me a sec. I'll allow you guys to unmute yourself in a minute, but just for now, throw me off. Okay, in phase one, you don't want to do paid ads. You don't want to do any of those things. What you really want to focus on is organic. You really want to focus on selling your first 5 assessments. At what price point? That's up to you. Our recommendation is to try to sell it at $2,500. Reason being is because you can do a lot more with profits than you can with loss. Okay, let me say that again. You can do a lot more with profit than you can with loss. So if you charge less, it's harder for you to justify doing more. Okay, you're not incentivized, they're not incentivized. The more people pay, the more people pay attention. So 2,500 is a decent little number in the middle. Why not 5K? If you can charge 5K, Kevin, go for it. It's in phase one, it's all about momentum and really um, creating momentum and also creating the confidence internally. The reason why most people will go to 997 is because their confidence is very low. Or if they go to $500, it's because their confidence is very low. If your confidence is very high, then yeah, 2,000, 5,000, 3,000. I wouldn't go probably more than 10,000 for an assessment, but you could. You want to create the process for selling, meaning you want to use the assessment selling system, which is you get a person, you show them the presentation, you tell them the assessment, which is basically a tax plan, but you tell them it's an assessment. You're going to tell them it's an assessment because they know what a tax plan is. They don't know what an assessment is. So you're going to basically give them an assessment for 2,500 bucks. And then you put once you get paid, then you put their information into Tax Maverick. And you want to do that process for the first 5 people. You want to do it personally as the business owner, as the leader in the company. You want to do this because you have to understand the process. And then you want to aim for your first annual program. In phase one, you want to learn and earn at the same time. Once you go through phase one, then you go to phase two. Phase two is the sucky middle. It's the messy middle. You know how they say a messy middle? Well, the reason why phase two is it's a lot of building and it's a lot of sucking, meaning you're going to suck at a lot of things. Most of it being advertisements. You're going to suck at conversating with new people. You're going to suck at selling new people. You're going to suck at delivering for new people. And that is the messy middle. In fact, most people in this program, if they do fail, it's because they don't get through this phase, because they get scared, they get emotional, they get the things that normal people have, but they stop. Most people that get stuck here never realize or actualize their true potential because it's like 3 feet from gold. This part sucks. I will tell you the truth, because here in phase one, you just got momentum and you're like, cool, I just made money from all these assessments. Some of you guys just made your first sale, made your first 5 sales, made your first 10 sales. You're like, oh my gosh, it's never going to end. And then in phase two, it all ends and you start sucking at everything. And then you're like, oh crap, I suck again. And honestly, I can tell you because I've seen so many people go through these phases, myself being included. And this is where you're going to have to operationalize a lot of things. You're going to have to start doing a little more system stuff and not a lot of the fun things. This is where the boring business stuff starts to come into play. So we're coining this the building and launching stage. So you're going to have to build more of like, okay, what was my process for taking an assessment to a close? What was my process from taking that tax plan and delivering it to the client? What was my process there? You want to start building that little infrastructure, not before. Most of you guys are going to want to learn and try to set everything up. I'm 100% certain, 1,000% certain that if you do it this way, you will fail. That if you want to set everything up before, you're going to fail because you haven't tested it against the market. The only time you can do these things is you should do it in lockstep, meaning you do, then come back and create the process for how you did it. Why? Because you need it battle tested. You need it tested against clients. Yeah, it's perfect to have everything laid out, but then it's like what Mike Tyson says is everyone has a plan until you get punched in the face. Yeah, get ready to get ready. It's funny, right? Some people are like, wait to wait. And so that's why in phase two, you're going to be building the things that you made in phase one. Phase one is kind of messy. It's like, oh, just throwing things against the wall and boom, 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 boom. Phase two, you're like, what did I do in phase one that I can repeat in phase two? Right? Did I post 10 times a week? Did I post 10 times a day? Did I reach out to 10 of my clients? Did I reach out to 15 of my clients? Okay, in phase two, I'm going to do more of that. I'm going to build that little infrastructure and do more of it. But in phase two, you're also going to start something new, which is kind of the core thesis here. You're going to start advertisement. So maybe for the first time in your life, you're going to run ads. Maybe you run ads and they've never worked, and that's okay. That's where the most of you guys are going to have your most problems, and that's cool. That's why we're here. You're going to lose some money in phase two, and that's the objective. Because now you have to take what you made over here and go reinvest it into building the machine that can consistently pay you so you're not the bottleneck. And it feels ugly because you're not used to this. You're used to high profits, referrals, word of mouth. But in this phase right here, what you don't realize is that on this phase right here specifically, building and launching ads, is that you're building something that doesn't require, that's more predictable. Your business up until now has not been predictable. It has been nice to have, but it's always like up and down, up and down, up and down. And so this is why I say this is the most hardest part to go through, because you're building something that can go like this. and start to slowly, steadily scale. Now, this could be advertisement. This could be, it's just, this is where you build the actual acquisition system. Okay. And the core outcome here is to either break even or just lose less than 50%. So for an example, if you put in $1,000, you want to lose only 1,500. Okay. You want to maximize your organic revenue. So go back to phase one and do whatever you did to get those first 5 clients, do more of it. See if you can squeeze out more of that. This is what I told Steve Long to do. He made his first clients here. And then I told Steve Long, what's stopping you from doing it again? Go back and send that email again. You sent it 3 weeks ago. They forgot about you. Do it again. Right? This is where you want to do that. Okay, you want to do that. And then you want to streamline this tax plan delivery process. So, okay, I just reached out to my clients. This is how I did it in phase one. Okay, cool. I built that process. Now it's documented. Phase two, okay, now I just did a tax assessment. This is what I said. This is what I offered. This is how much I charged. Perfect. Documented. Now now in phase two, you're like, okay, I'm taking these assessments and I'm going to take them over to an annual program, meaning now it's time for them to work with me for the year. This is where you're going to streamline that tax plan delivery process where Tax Maverick is going to be huge, because then you could just put that into Tax Maverick, create the plan, give it back. Now you present it to the client. Okay. This is where you start paid ads and you lose money. In phase three, this is where things get a lot more fun, but also messy. Phase three is nailing it and scaling it. Okay. Nailing it and scaling it. Some of you guys have experienced this. And some of you guys have gone out of phase three back into phase two. But phase three is where you start to nail the process of paid advertisement, and it's starting to work, and things are starting to crank, and momentum's starting to build, and starting to move in your direction, and profits are starting to kick out like crazy. And you're starting to go from 30,000 to 50,000 to 60,000 to 100,000. It starts getting a little scary, because maybe for the first time in your business career, you're taking leaps and bounds rather than just little small 10% increases every month or every year. Sorry. This is where it gets a little scary, because this is like the roller coaster where it's like starts going really fast down the hill, right? Up here, you were going up the hill. And now on phase three, it's starting to like starts coming down really fast, because everything starts to just speed up, because now you're spending more on advertisement. You're getting more clients. You're making more revenue, and things are starting to happen in the way that you never thought were possible, which is the dream that you've always had, which is make a lot of money, serving more clients. And then you fix here is where you fix the client acquisition problem. And then it becomes the problem of, holy smokes, I got to deliver all this stuff. Holy smokes, how do I just like hold this all together? Right. And that's really truly, if I just kind of nail this part right here, is the funnest though, where you're nailing and scaling it, because now you can see where things are happening, what's happening, in what order. Now it becomes clear. So if I'm like an optometrist right here, you have really bad vision, I fix your vision, then I just do like LASIK here, and now you can see everything clear for the first time in your business career. Or maybe you've already done a couple $1 million a year, and now you're like, oh, this is how they do it. This is how these people do 3, 4, 5, $10 million a year. This is how they do it, because now they have predictability, they have scalability. Now it's a numbers game, not an emotional game. All this over here becomes emotional. This right here becomes data. And truthfully, because it's data, it gets emotional, because you're like, oh my gosh, I don't know what I should be tracking. I don't know what I should be doing. A lot of those things happen. Paid advertisement starts to become like a core concept. This is where you're going to hire your first or next team member. You're going to have some money left over at the end of these things. Hopefully, if you're doing it right, you're going to streamline your annual program process, and you're going to start to clean up your fulfillment system. All right. Um, yeah. Yeah, you're going to start to clean up your fulfillment system. Some of you guys are in phase three, and that's where, when you're in phase three, we invite you to MDC, because MDC is really more about, now we need to help you with the people, we need to help you with the process, and we need to help you with the profits right there, right? So MDC is typically on phase three. Once you guys get into phase three and it starts to get like kind of crazy, and it starts to spitting out like crazy, like money, then in phase three, that's when we advise that you go into MDC, because that's the next break point. So you're gonna go right to like almost to 100K a month, and you're gonna like not intentionally, but because you've never been there before, or you haven't been there in this particular thing, you're gonna almost start to self-sabotage it, right? Not intentionally, but it's just something that I've seen over and over and over. And what you need at that point is you need to hold on for dear life, because right here is where your emotion's gonna get the best of you, and you're gonna go backwards because you're not used to it. So this is where you're going to need someone like you need to be here more often, not less, more often. The reason being is because you need to be in the ears of the people that have already gone past that. You need people that are talking to you that have already gone through it, and kind of almost telling you like, hey, it's okay. Amit, what you're going through is cool. Pam, what you're going through, it's cool. Marbell, whatever you're going through, it's cool. It's okay to feel that, right? And this is where new emotions starts to come up. But in phase three, it's a lot more fun because there's a lot more money making. You're making a lot more money. So there's a lot more opportunities you can do. And so if I pull back these three phases and I put it into four categories, if you will, and it almost goes kind of like in alignment with how you grow your business. In the beginning, it's promote, 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 promote. Like promote what you do, promote who you do it with, promote who you do it for, promote all these things. Then once you've done the promoting, then you get some profit. From the profit, then you create the process. Once you create the process, then you plug the people into the process and you repeat the process. Okay. And it becomes a like a kind of like a cycle. So it goes from here to here, like this. And then it goes from here to here. And then from here to here. And then you go back and you do it again. And I know I feel like I'm talking to the, you're like, oh, I get it, but I don't know how to do it. Well, the first step is wherever you are in the process, you should already identify yourself like, hey, I'm in phase one. Hey, I'm in phase two. Hey, I'm in phase three. And here's a good way to kind of identify that. If you're already doing $20,000 to $30,000 a month, you should be close to phase two. If you're in 10 to like anything less than $20,000 a month, recurring or business, if you're doing less than $250,000 a year, you should be in here, phase one. And if you try to jump over to phase two, you're going to lose your butt. Meaning, it's going to be a lot of work, not a lot of payoff, and it's going to be frustrating. So that's why business is all about cycles and systems. And so that's why I build things in systems so that way I know how to, not just me, but anybody on our team can look at y'all's business and say, okay, you're in here. This is what needs to happen so you avoid this pitfall. Does that make sense? It's all about systems. Perfect. So I went through that faster than I thought I was going to go through. Anybody have any questions about this? The process? Oh, go for it, Paulina.
Okay, so here's my question. So I can see on the scale where it is.
Yep.
One that I have is as I'm trying to hone in more on the advisory side. So like, again, I've been doing bookkeeping, I've been doing all these things. How do I judge this? Because I'm already at 20 plus a month, but it's based on a bunch of things. So do I base it solely on the advisory side? Or again, I'm all ears.
Yeah, I got what you mean. Because you're not actually the only person thinking that, because everybody's like, I've already done $1 million in tax prep. So where do I fit in? Right. Or I do 2 million in bookkeeping. Where does I fit in? So this is if you're a perfect business that doesn't have any other businesses going on. But what I would say, the reason why it kind of like you're right here, you're right between this one and this one. You're not in the phase where you should be paid ads yet, but you're in the phase here where you should be doing assessments. So even though you have the revenue, you don't have the outcomes that you need, meaning this part right here. So the outcomes, if you have the revenue, the outcomes dictate the phase. So for an example, Paulina, your main core thing is selling these first 5 assessments, creating the process, and creating a tax plan. If you've done these 3 things or 4 things, then what happens here is if you sold it let me ask you the question. Let me stop here. Have you sold 5 assessments from through our process? Yes, no? Yes or no? Okay. Oh, okay. All right. I don't know why. I guess when I muted you.
Yeah.
Okay. So have you sold your first 5 assessments?
Yes.
How many of assessments have you sold?
I believe I've sold 6.
6. Okay. At what price point?
At the 24.95, 97, like $2,500.
Okay. So that money right there, see where I can almost tell you where you're at based on what your problem is, because I know that you're right in here. You're like right here. You should be thinking, you should already be starting to get into the paid advertisements. So you're like in that little messy middle. See what I mean? And that's why it becomes kind of like chaotic in your head, because you're like, where am I at? Because you feel like you're not it's kind of like my son's 11 years old, right? So my son doesn't know if he's a teenager yet or if he's still a baby. So he's in this little messy middle of like, where should I find myself in the world? And that's kind of when you're jumping from phase 1 to phase 2, that's how it feels. It feels like, where the heck am I? Who am I? What do I want to be when I grow up? And so that's right there where you should be, Paulina, doing paid advertisement. I know you're doing LinkedIn, but if you're not pushing, like right now, remember I told you about the messy middle of phase 2? You're like on the bottom of phase 2. right where it's starting to get, it's going to get hard in a few, like maybe not a month, but like maybe in a month or so, it'll get harder. But where you need to do right here is you need to lean in and push harder on the thing that worked. You need to push extremely, well, not harder, not, you just need to push through is what I'm saying.
Yeah.
So you're in the phase right now where you should be building and launching, and you probably are in that phase. But if you're in that phase too long, it gets kind of like, it gets,
Burnout. It just,
yes, you get in that phase too long. That this is why I try to get you guys in and out of phase two, because this is where you guys start to question everything. You're like, is this the right program? Is this the right? Am I doing the right things? Am I selling the right price points? Like you question everything in this phase because nothing seems to be working. What happened in the beginning worked like crazy, and you're like, oh my gosh, this is amazing. And then phase two happens, and you're like, nothing works. I keep pushing, nothing's happening, and
yeah.
then all of a sudden you find yourself on the bottom of this thing right here, and it's just like it worked, right?
Yeah.
And phase two, when if you're staying in phase two long enough, you almost feel like quitting a lot, actually, almost every day. And if you're in phase two, you almost have to push harder, faster, so you can get through it quicker. Because if you stay in it longer, the only way to get through this faster is to push harder, faster. Like meaning you need to put more data into the system so that you can take this $700 a week. I'm just giving hypothetical numbers, by the way. You take the $700 a week and you spend that every week, right? And that way you get more data faster. If you guys have attended my ad intensive training, most times my solution to all the what I tell you guys is like you don't have enough statistical significance, no, not enough data for me to tell you what to do, so just spend more. And most times that's not what everybody wants to hear. They're like, "What about the new thing?" I'm like, "Not yet. You're just right here in the this middle right here. You got to get through it." And then we could try new things after you get through this phase three. Like in MDC, right? $1 Million Advisor Club. Once they get through this phase three, then we can teach them the new thing, which is one-to-many selling, which is like webinars, right? Teaching them how to sell through the webinar. But if you can't master these three phases, then it's going to be very difficult and you're going to snap back. So Paulina, you're like right on the cusp of phase one and phase two. And so your advice here would be do what you're doing, do it faster, like you said earlier, and do more of it. Do more and do faster. Like turn the cycle faster on it. So if you're doing 100 LinkedIn per day, take it to 200, take it to 300. What's stopping you from doing that? And then you just ask yourself that question. If what's stopping me from getting 300? Is it more profiles? Okay, who can I talk to that can get me more profiles? And then boom, you solve the solution. So it's about solving solutions. In this phase right here, this is where most people will get stuck around $20 to $50,000 a month. And they'll get stuck there because you're like usually a 1 or 2 person operation, maybe 3. And if you're really, you don't have a lot of profits on it, you're more than 5 people at this point. And this would be 2 things I'd be thinking about for you, Paulina. Push more, and I would be thinking about my first executive assistant.
Already on it.
Okay, cool. All right, cool. All right, good. Those are the 2 things I would be working on right now. Cool. Good
Thank
question,
you.
Paulina. Does that help you? Okay, cool. Let's see here. Who has a question? Oh, Pam has a question. What's up, Pam?
Hi, Dan.
Hey, Pam.
Paulina had a great question, and I think I have the same question. I'm gonna kind of ask the same question again.
Mm-hmm.
So the phases that you're talking about, it should be basically, are you saying that we should say, okay, this is the service, tax planning and advisory is the service that I'm trying to put through these phases. So not worry about accounting, other services that we provide. Am I
Not necessarily. Like this is an unspoken rule, but the business needs to stay in business. Like the
Okay.
business you have has to stay in business
Right.
until this one can replace it or complement the other one. Because
Okay.
eventually they're gonna have to collide at some point. You're gonna have, and not in a bad way. They have to come together, meaning a true ascension path. Meaning, so tax prep leads to bookkeeping. Bookkeeping leads to tax advisory. Tax advisory leads to assets under management, wealth management, CFO.
Mhm.
Right? There has to be a true line of path of a client journey. Right? And right now you have them kind of like this.
Right.
So one's over here, one's over here. But eventually they have to kind of like come like this and go up. Otherwise, having them separately too long is going to cause you too much internal chaos that you're either going to stop one or stop the other. When in reality, you should do both. You
Okay.
should have them together.
So when we're looking at these phases, so we should be considering the revenue that we're bringing in from all the streams of income?
Ideally, yeah, because it
Okay.
gives you a little bit better scope. Like
Right.
yours is, I think you guys did what, 900 last year, something like that, or
Right.
7. So
Right.
so revenue wise, you'd be in phase 3, but the system itself, you're still in phase 2.
Right.
See what I mean? So through the system, you're still in phase 2 because you haven't really done you probably you started the paid ads, you're maximizing the paid ads.
Mhm.
You've done these things. You're probably like on the first part of phase 3 at the end of phase 2. So notice something that, like you're in the right here in this phase right here.
Right.
And if you notice, the people that you guys are having the questions, you guys are like if you think about it, it's almost like like a how do I call it? Like kind of like a step ladder. So like everyone that's gonna have that question, that's gonna pose that question right now, is right here and like this, right? This is kind of how it's feeling. So right here, right at the point of this point right here, you're gonna feel contention. Oh, I'm sorry. Yeah, right here, you're gonna feel some contention. Right here, you're gonna feel some pressure. And the reason why you're feeling that pressure is right before the breakthrough. You feel that breakdown. See what I mean?
Yeah.
And sometimes when you scale your revenue so fast, you go like this, boom, boom, you go through it quickly. And then if you don't fix these things here at the bottom, you snap all the way back like this. So even if you jump your revenues quickly, like some of you guys have gone from 0 to 1 million very quickly, or 0 to 500,000 very quickly. And that's where you need to start building these infrastructures down here so that you don't snap back. You can probably push back, like meaning you could jump back one tier and go through this problem again, but you don't snap all the way back. That causes like big time problems with the business. Does that make sense?
That makes sense.
Yep. So right now, Pam, you're like in the phase where you need to build out some of your infrastructure.
Yeah.
Meaning, I'm sure you have your team on here, which is good. They get to hear me, and also like your assessment process. I know that you guys recently just changed it, so that's what throws you back into the loop of like
Yeah.
the learning system again. You're back into the messy middle. So like you jumped yourself back into the messy middle after going through the scaling and where you were in the print money phase. It was like amazing, right? For that couple weeks where you're just like, boom, 20,000 a week, 20,000, 30,000 a week, $100,000 a week. And then it jumps back because we changed it. So now we have to go through the messy middle of the new thing. And then we can come back to this. Does that make sense?
That makes sense.
So that's where you're at. Good question. Good question, Pam.
Thank you.
Hope that
Thank
helps
you, Dan. And I do have one question, another question that may help everyone else. I don't know if everyone else is having the same issue. Because we focus on healthcare professionals, mostly doctors. And when they schedule a call with us and there's so many reminders, we send them text messages and so that, and we're getting a pushback saying that, hey, I'm trying to sleep. I'm on call. I'm supposed to be checking all these messages and I have to check all these unnecessary messages. So how do we respond to those? They said you're sending too many notifications.
Are you asking me or are you asking?
I'm asking you.
Oh, okay, gotcha,
Yeah,
gotcha.
and if anyone else is also having the same issue.
How many messages do you send?
I was looking at it. So once the discovery call is scheduled, so almost one message a day.
Okay. And then how many people have complained?
Few, maybe
Few
5.
being 5?
Five,
Okay.
uh-huh.
5 out of how many?
5 out of probably 50 plus.
50 plus, like 100, or 50 plus, like 55?
That's a good question. I don't know how many discovery calls we have scheduled. So let's assume 50.
Okay. Well, there's a big difference of 50 and 100.
Okay.
But here's why I asked that line of questioning.
Mhm.
So before I make changes, I always question that. I always question things, and here's why. Because sometimes, and now I'm not saying this is not true. It could be 100% true, but sometimes maybe that's just the cost. Like you have to look at it also through the cost of like, if I don't follow up as much, will I get more or less show ups?
Right.
Does that make
76.
sense?
76 calls.
So 5 out of 76, right?
Mhm.
What percentage is that of people that said that that's too? Now, let me ask you a question.
Mhm.
Those 5, did they show up to the call?
No, this one canceled.
One
Yeah, one
of the 5.
canceled. The others, some complained and some did say, yeah, you're spamming me.
Yeah. Did any of those show up?
I have to go back and take a look at it.
Yeah.
I got this question because I was dealing with one issue that there's a cancellation today.
Yeah.
Just because that, and then he's a very qualified lead.
Yeah, gotcha. So the reason why I asked is because I usually don't like to make plans on the exception. I like to make the rule and then I make an exception for the exception. For an example, the way you got to think about it is if I follow up less, then will I get more or less people to talk to?
Okay.
Right? Or another way to think about it is, why are they upset with my follow-up? Is it because my follow-up sucks? Can I improve the communication? So maybe the reason why they're upset with your communication is they don't want to be communicating that way,
Okay.
or they don't, maybe it's not giving value, right? And so I wouldn't change my process, particularly, Pam, for
Mhm.
one or two people. That's why I asked that line of questioning is to find out, is it statistically significant enough to make a change? So from what you told me, you had 76 people and you had one person complain and not show up. Okay.
Right.
And so if you look at the statistics here, right? 1 divided by 76 times 100, that's 1%.
Yeah.
1% complaint rate.
Mhm.
Now, do we want to change our process on 1%?
No.
Right? And so I'm not saying not to do something. You should 100% think about doing something, but until it creates enough chaos that it's causing a problem, then I would handle it. But right now it's just a complaint. It's not a, let me put it differently. Um, it's like a ember. It's not a fire. It's not like a forest fire. See what I mean? And so your time could be probably better spent. Like instead of thinking about, "Ah, I should change this thing, you should be like, maybe I should hire someone so I don't have to deal with these things again. Maybe I should hire that salesperson, or maybe I should hire, what, maybe it's not that. Maybe I should spend more on ads, right? Maybe I should create new videos for new ads so that I don't even get these people again.
Okay.
Does that make sense? So like you almost need to level, not like you're leveling up your thinking by asking better questions. And those are good questions. How you're asking them are good questions. By asking that question, I know your line of thinking. So like you should be asking yourself now, with that time I would have been spending fixing that text message or that follow-up, should I just use that to create a whole new ad? And maybe I just say, if you have a problem with this, this, and that, don't even schedule. Don't even try it. Because this is what we're going to do. This is who we are. Right? Does that make
Yeah.
sense?
Yeah, that makes sense.
And then that way you actually avoid that problem. It's like you know how they say, like, if you win the bat, like some people win the battle, some people win the war.
Mm-hmm.
You want to win the war, you don't have to win the battle.
Yeah.
And so that's how you take your like expanded thinking a little further from where you're at. I hope that helps, Pam.
Really helpful. Thank
I
you.
hope it helps.
Thank you.
Elena, does she have a question? Thank you, Pam. Hey, Elena, you had a question?
Yeah, I wanted to, we're definitely not on phase two, we're just starting, but when you were talking about phase two and saying that it's getting harder, I wanted some kind of, like pinpoints, like what is it actually getting harder? Is it like you're getting more people to talk to, you don't have time to talk to them? What are
It's
those?
kind of all the above. It's kind of all of the above. That's what happens in phase two. That's why I call it the messy middle. Because now you have more people to talk to, less people are saying yes. And now you're like, oh my gosh, like I'm talking to a brand new person and I barely know the things that I'm doing. And I'm having to convince them into something that they're not being convinced on. And so it's a lot of mental things that happen here because now you're fighting two battles. You have to get people that don't know you to know you and want to give you money. And then number two, you've never done this before. So you're losing money at the same time. So it's like collapsing like this, right? You're losing money, which you're paying for marketing or whatever, or you're paying for a new person, or your money's coming out to get more people in the door, is what I'm saying. It doesn't have to be paid ads. It's just something's going
So
out.
basically, it means that the first stage is built on warm outreach, and the second stage is more like cold.
Yeah.
Is that
So
correct?
yes, exactly.
Okay.
Exactly.
Okay.
And the reason why it's that way, because you could build your whole business on warm. However, that, you remember I told you about the little thing like this? Well, that takes it to 20 years instead of 12
Yeah.
weeks. That's why it's so messy in the middle, because it becomes so like challenging, because it's compressing your changes into like your decades of, what you've done, and it turns it into literally weeks. So you're like having to change very quickly. That's the only difference behind it. Like once you get the system, it's not the problem of the system. It's the problem, like, I don't know how to do the system. So it creates this internal turmoil, because we know fundamentally, if the numbers are there, it's going to work. Like it's going to work. The math does math. The challenge there is, yeah, in phase one, it's all about warm outreach. Some of you guys have done warm outreach for your entire career, which is why you guys have built an amazing business. To the tune of, maybe $1 million a year or whatever the number is, and you did a warm outreach. It just took 20 years, right? And what we're trying to do is we're taking that 20 years and compressing it into 2 weeks or 2 months or 6 months in this case. And so that's the only reason why, Elena, is why you'll feel that pressure in phase two, because you'll get the momentum and then it'll drop back down because now you're building something new. Does that make sense?
Yeah.
Yep. But I wouldn't avoid the momentum though. In phase one, go get the momentum. Yep. Cool. What's up, Kevin? Last question here, Kevin. Thank
Hey,
you.
Dan. So Happy New Year.
Happy New Year, my man.
Question is, so tax season phase 1 is pretty easy to do, I feel like, with so many, I mean, we're like high in demand, right? Over the next couple months, which is great. It's mainly for me like summertime where things die down significantly. Is there like a better time to do ads as far as like the timing? Is it make more sense to do ads perhaps starting in summertime versus tax time?
I love this question. There's a guy that I follow that's helped us a lot with our webinar process and selling, and he said when things are easy, go hard, because eventually they'll get hard, and you have to go easy. And so right now in tax season is where you should actually maximize it, so that you can kind of ride the tailwind of the momentum you built right now into the summer, so that your highs stay higher and your lows don't have to go as low. Does that make sense? And the reason why I'm saying that is because when there's momentum, you want to ride the momentum. You don't want to have to make a wave. You want to ride the wave. See what I mean?
Mm.
So like, if you think about it through that lens, in the summer, you're pushing hard. Like, it's almost like you're pushing the ocean to move the water so it can get a wave. Right? But right now, the waves are crashing. There are waves everywhere. You could just get a surfboard and put it out there and you're good. Like, let's roll. And that's kind of why I would say that recommendation of like, when it gets easy, go hard. Right now that it is easy, you should go hard, because eventually it will get hard.
Do you
And-
recommend to do ads during tax season? Wow.
Yeah, I mean, Ralph's doing it. So is
Mhm.
Amit. So yeah, I
Mhm.
mean, and so is Steve, and
Makes sense.
yeah, I would. And here's why. Because think about the logic you just brought to me. Is like, should I do ads in tax season because it's already momentum? Some people are going to say, nah. And the fact that you came here and asked that question, you're going to like probably think I should do ads, is good, because your competitors are probably thinking, nah, I'm not going to run ads till the summer when it gets hard. Does that make sense? And that right there is how you're going to beat the competitor. And your competitor is not. Now, Ralph's giving me a thumbs up on that too.
Mhm.
Yeah, I would do that, Kevin. If you have the means and you have the revenue and you have the systems built out, I would totally start the process of the paid advertisements.
Okay. We're almost
Yes,
there.
sir. Yeah, very
Okay.
close. I would definitely try to ride the wave if I could.
Thank you, sir.
Yes, sir. All right, guys. Well, I hope this helps you guys out. I hope this helps you out as far as the thinking, the thought processes behind how to actually scale a business. If you're in phase 3, you're probably closer to like 750 to 900,000, maybe past $1 million already. And the reason why I say that is because that's kind of how this kind of tracks in order of processes. And that's why I like to look at things through a process lens, not through like a emotional concept. Like, I can kind of pull apart where you guys are feeling or what you guys are going through and know where you are revenue wise to determine, hey, this is where your next path is. And I think that's what's super helpful from what we do versus anybody else in the marketplace, because nobody can really articulate how to do that systematically, because they don't do as much as we do. Not revenue wise, but they don't do as far as like client interaction as much as we do with you guys. So we have like boots on the ground. Plus, we've also built $1 million business on the back end of this, like a multi-million tax planning business. So we understand both concepts. We understand how to teach you guys, but also how to do the thing. So that's why you guys are in the best place possible at the best time possible. Like Kevin mentioned, like, is it a good time to do it? 100% right now. Yeah. If you guys have the opportunity to leverage because people are going to come through your door already. You might as well introduce them, Tad, to the new service you have, which is tax advisory. Everyone that comes through your door, and say, hey, look, also, we have a process we have a way we can help people save money on taxes. And those are just easy drop in the buckets. Like, just put them in there, So I hope this was a valuable time, or a good return on your time here. That's my intention. Every time I come here, I want you guys to have a good return on the time that you spend with me. And by the looks of it, 41 people are here. So I think I did that part. You guys would have dropped off earlier. So I appreciate your time. I appreciate your attention. The most valuable thing you have in life is your time and your attention. I'm glad you spent it with me. So thank you guys so much. We'll see you guys in the next one. Bye.